Hi guys and welcome to the trading show. This week we are gonna talk about markets, metals rise, our portfolio VXX best performer, tip of the week, bias on oil and gasoline, and the weekly rollover. And if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Well, during the week we report a slowdown in the American and European stock markets. Here we see the Nasdaq and the Euro stock futures, which all show negative returns. Noteworthy is the trend of the energy sector, which shows positive returns ranging from 1.25% of crude oil future to 3.20% of gasoline. But truly impressive is the performance of the metal sector, with the silver rising by more than 16% over the current week. Then we have a stop in the uptrend for copper, which was very strong in the last month. And finally, we see very strong move also for platinum and gold future. Regarding Bitcoin, it seems to give some sign of life. It was coming, in fact, from a very long sideways period. Talking about volatility, we don't see any particular increase despite the decline in equity markets. We can notice just a slight increase in Nasdaq, but as you can see, it remains generally low in all equity index future, at least with respect to March level. Obviously, there is a strong increase in volatility on silver due to the strong explosive movement that it showed during the current week, and also the grain sector shows a considerable increase in volatility, especially when compared to the average values. For example, soybean, wheat, corn, bean oil, and so on. Anyway, on a longer time frame, the current level of volatility generally remains high on all underlying, with percentile levels ranging from 80 to 100. As for the implied volatility term structure on the American stock SPX index, in this chart we see its 5 volatility indices. They are almost in contango state, except for long-term volatility. And in general terms, we see the medium and long-term volatility definitely higher than the short one. And this, as we know, is a likely effect of the next American elections. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hello everyone, and welcome back to this new appointment with the analysis of the systems in our portfolio. I am Alessandro Danos, and today I will talk to you about how our systems have performed in the last week, starting with this system on VXX, which is the ETF that replicates the trend of the week's future on 1 month expiration. So the ETF in question buys and sells the expiration at 1 month and 2 months to ensure that the average duration is 1 month. It is a system that only goes short, following an increase in volatility compared to its average. And we see how in the last week the system managed to achieve this beautiful series of trade, which brought the system to the maximum of equity. From the strategy performance report, we see how following a somewhat unlucky month in June, where the volatility increased a lot, the strategy managed to recover losses by reaching new highs. The next strategy that I want to show you is a system on the Bund, which is continuing to perform very well. We use it with 2 contracts. Let's see how in the last week the strategy managed to take these 2 trades, one short and one long, both positive. Is a breakout system developed 5 years ago on a 15 minutes time frame, which continues to respond well to these trend following logics. And we see how, even from the strategy performance report, the strategy is on the maximum of equity. Here has made a very negative trade following the Brexit, in which we saved ourselves because on such shocks the trading system generally fail to perform well, because the market movements are so high that all the calculations and common sense used to develop the strategy will be deleted by the extreme volatility. Aside from this trade, the strategy has performed really well. Finally, I show you 2 very similar systems, to tell the truth, which enter on metals market as a breakout, and specifically one enters on the platinum future and the other on the gold future. Starting from the platinum system that was developed on daily bars, we see how the strategy has managed in the last week, following an increase in volatility on metals market, to achieve a take profit of about 60 points, which on platinum equals to $3,000 with one contract. Then following up, and we can see it from the equity line, to the good things he had shown in the past. The gold system too, which follows the trend following logics, managed to reach a take profit in the same period in which platinum took its own. As we know, these markets belongs to the same category, metals, and therefore the correlation between these markets is generally very remarkable, although it depends on the underlying analyzed. There are also those who use underlyings of the same category to make spread operations in which the gain derives from the difference in volatility between 2 or more related instruments. Taking a look also at the equity line of the system, we see how, with yesterday's take profit, the strategy managed to reach new equity highs, thus bringing the annual profit to over $5,000 in just 8 trades. We are therefore pleased to note that our systems, in particular on metals, have successfully exploited the volatility generated by the markets.
Hello everyone, hello from Andrea Unger, and today we will see a particular bias, and in particular we will talk about the intra-week bias on some energy future products. So here we can see the average movement that occurs on the HO future, that is the heating oil, that is listed on the NYMEX exchange, and on this chart is represented the average dollar movement of this instrument into the trading week. So from the left to the right, we start from the opening of Sunday at 6 p.m. and then the charts end at the 5 p.m. of Friday. And this line represents the cumulated sum of the average movement that occurs into the instruments during the trading week. So here we can see that usually the heating oil future has a particular behavior, And in fact, on different considered periods of time that are represented by the different three lines, usually the heating oil goes down on Monday's session, so from when the Monday starts here until the afternoon of the Monday itself. The instruments on average on three different periods usually goes down. And vice versa, it's also interesting to notice that the instrument usually goes up on Wednesday and also on the Friday afternoon here. So I just underline which are, in my opinion, the most interesting movements. Of course, you can also consider the Wednesday's one in this case, but I didn't choose it because I wanted to also let you notice another thing. So this can be a very interesting strategy that can be coded, and of course you can try to code this behavior and try to replicate your strategy according to these very simple rules. But there is also another interesting fact. In fact, the heating oil future is highly correlated with another future. That is the RBOB gasoline. That is listed also in NYMEX, in the NYMEX exchange. And here is the chart of the normal trading week of the RBOB gasoline. And also in this case, so on another very correlated products, we can see the same characteristics. And this is, of course, a very interesting thing also because it seems to confirm what are our suspects. So also here I have underlined the major and the most interesting movement, of course, which are, in my opinion, the best movement. I have tried to code the different bias in this case, so both the Monday's bias, then the Wednesday's bias, the Thursday's bias, and finally the Friday's bias. But the most promising, in my opinion, are the Friday's one for the long side and the Monday's one for the short side. So of course, once you will have coded this kind of behavior, the strategy will not be finished, and you should also verify which are the best time zones to enter and exit from the market, and it's possible you will have to add some more filters just to improve the quality of the trades and or to reduce the overall drawdown of the strategy, because I want to remember you that both RBOB gasoline and heating oil futures are very volatile futures. They have a very huge monetary volatility, and so the excursions on your portfolio may be very important. So it's really important also to set up stop loss for these positions, and of course to improve the quality of the trades, filtering them a little bit.
Well, rollover calendar. These days we have to roll natural gas, heating oil and gasoline future, which formally expire at the end of month, but the greater liquidity is already on September contract. Then next week there will be the rollover of Bitcoin future, and later also the live cattle, which expires on 7 August. However, it's already possible to see a greater open interest on the October expiration compared to that of August. Well guys, so if you want to learn how to build trading systems like Andrea Unger, the only 4-time trading world champion with real money, go ahead and click on the link below. You will be able to pick a date and a time for a 45-minute call totally free with one of our tutors. We will talk about your current situation, what you are doing in trading, and what you would like to do instead. And we will try to understand together if we can help you achieve your trading goals. Finally, if you like this video, press like and then subscribe to our channel. Thank you for watching. See you next week with another episode of the Trading Show.